Bitcoin is right now in the middle of a strong weekend rise. While this is very positive, we need to be aware of the CME trading gap that will be opening tonight, 11 p.m. UK time. That is when the CME opens again after the weekend of being closed. As price has risen during the weekend, we will have a CME gap to the upside. A lot of people view this as very bearish because it is true that there is a high percentage of gaps that get filled, but a lot of people misread that, thinking that the gap needs to be filled straight away. Thus, when the CME opens, they like to take their short trades. Many times, though, this can end in a bit of a squeeze. So I want to cover the CME gap and the next 1 to 2 weeks of price action. So I hope that you not only like and enjoy this video, but you can learn something and be prepared for what is to come next. So with that said, let's come over to the charts. Aim of this video is to keep it around 10 minutes. So let's see if I can hit my target of a 10-minute video. It'll be the first in a while. But having done a video yesterday, we can pretty much just very quickly spend 1 minute analyzing this bit of price action that we got going on here. Of course, now getting a above and a reclaim of the point of control. So this is a very strong indication of the move to the value area high next. But just a really quick recap of what's going on here. Of course, overall, we had this Elliott wave count, which was for short-term pain, long-term gain. And we had the short-term pain coming down to around $112,000. That gave us a overall A, and then within that, the A, B, C, D, E for the B, C to give us a first W, failed impulse to give us a W, X, Y. It came down to around $112,000 where we had the Elliott wave target zone. On top of that, you also had the three drives. Three drives pattern is that first initial move to the downside, your rally, second drive downwards rally, and then you get a third drive. This is a three drives pattern. You can see it listed there, three drives pattern. So that third drive to the downside, again, the target was very similar to what we were looking at on Elliott Wave. So all around that $112,000 zone before a reversal. So this is drive 1, 2, 3, full reversal to the upside. And what's nice is you got a few different targets, not only down at the lows around 112, but now up and around the highs towards $120,000. With what I'm going to be focusing on in this video is off of the reclaim of the value area low, giving a target of the value area high. This is a very simple trade strategy. Reclaim value area low, target value area high. I do agree it's very simple. Very key level there, of course, around $118,000 of the range point of control. That is a key level where you could get a reversal. And I find what we actually done here was just absolutely wonderful. If I just show you what we were looking at of this fixed range pool, so we were including this bit of price action, and I had it lined up to around as we were just starting to get back in. It might have been the actual lower to move. Sorry, yeah, the lower to move. So I was looking at this as our previous range, and of course now we are getting acceptance into that previous range. So you reclaim value area low, target is that value area high zone, but the point of control can offer a significant resistance. So when you zoom down here locally, these are levels that we were looking at in prior videos. When you actually see this locally, yesterday we hit into that point of control to the dollar. It was really, really nice. I actually took a scalp short trade there. Of course, I'm out of it now. Hit take profit 1, stop loss move to entry. Of course, we got a rise, so stop loss was here, entry. It was a small profitable trade, but yeah, that's all that we can say about that one really. But you can just see the respect to the levels here. Point of control to a back test of the previous range value area low, and now we're trading through that point of control. So I really am going to be saying this $117,900 is very, very key to hold as support. If we are to move on to the next target towards $119,000, let's call it $120,000 zone, I really would like to see this $118,000 level hold. If that doesn't hold, and I do think that that's where it activates this CME gap that we're going to be looking at tonight. So the CME closed Friday evening, of course. Every weekend it does this. It closes Friday evening, opens up Sunday evening. Okay, to be precise, closes at 10 p.m. UK time on the Friday, opens at 11 p.m. UK on the Sunday. So we've got the weekend closed. But what's happened, of course, during the time that CME is closed, we still got our regular markets all trading, right? Because crypto never closes and the crypto never stops, but the CME does. But they're a big player, right? It is helpful to analyze this CME chart because there is a lot of volume on it now. So what we're going to be doing is, we can see right now we're trading around $118,500. The CME actually trades at a bit of a premium. So let's say we're opening again, give or take, because again there's still another, what we're looking at to 7, 8, 9, 10, 11. We're looking at another ish 9, 8 hours, right, before the actual open this evening. So we got a bit of time. And why I don't say the exact dollar now is because, well, we could be trading here in 8 hours time. We could be trading here in 8 hours time. But what we do know is where the CME gap is going to start from. But let's just say we open up and let's say we open $118,700, right? But understand this is going to be adjustable because we have to wait till 11 p.m. UK time. Anyway, nevertheless, let's keep this video short. We're going to have that CME gap to the upside. So you're going to see price gap, and there's going to be no price action up to the high here. And a lot of people would view this and say, right, we've got a CME gap. I'm going to take my short trade here. We'll come down. We'll fill that CME gap where then they can look for their long trade for continuation. But I do not really like this strategy of just saying, oh, there's a CME gap. I'm going to short for the gap to fill. A lot of people would say this because of the high probabilities that the gap gets filled, right? We're looking at over 90%. It's very, very likely that when you see CME gaps, they get filled. Here, for example, and this is a strategy where it would have worked actually very well. But again, you do have to have a few more factors rather than just this. But you can see here, look at this, the close on Friday, gap open on the Sunday. Look at this, just absolute pinpoint perfection. You see the gap, you see price retrace to fill that gap when you get a rally off the back of it. So this is what I'm talking about. Like these gaps, you do have to pay attention to them because they do like to get filled. You know, you're going to see several different gaps here. You can see another gap here. This is a weekday gap. Okay, from the close on the Tuesday, open on the Tuesday evening. So it closes every day, right? Be 10, opens again at 11. So you close for an hour. You can see another gap there. You pulled back and filled it. And then, of course, you have the really, really big gaps. So this was a wonderful gap fill as well. This was a major CME gap. So you can see how you gapped up here. And it took, you know, nearly 1 month before you filled the gap. And this is the thing, you get those CME gaps, but they do not need to be closed straight away. But there is a high probability of closing them. And this was just another example. And we do have the bigger gap that was formed. God, sometimes I need to remind myself where somebody's... here we are. Yeah, this was the one where we formed the low, right? So we gapped down and we formed a low on the middle of June-ish. And then you come up and you filled the gap and you just got straight continuation. Anyway, that's the CME gap that we're going to be forming tonight. And just a quick overview there of how these gaps do like to be filled. But what I think is really key here is not just... Well, I already know we're going to see the CME gap. But it's not just saying, oh, we're going to form a CME gap. Let's just take a short straight away. I think there's a few different key factors for me anyway that I'll be looking at tonight. And the first key factor for me is if we opened a CME and then we get weakness and a loss of $118,000, $117,900, well, then I think it's very, very likely we get the fill of the CME gap. But what I'd be cautious about here is if we open the CME and we're still trading above the point of control. Well, if that's the case, I don't have any, I'm going to short, take this really super aggressive short trade. Why? Well, we're trading above what was a major resistance, right? This point of control was a major resistance, but now we're trading above the level. Well, this is now a really big support or a very important support level. So although, yeah, we're going to have the CME gap from Friday evening, right? We're going to have the CME gap very close to this value area low. But what I'm saying is I wouldn't say let's open the CME gap or I'm going to instantly short for $16,500. Well, you could do that, but I would just say I'd play with caution there because of the fact this is a major support level. So we can open the CME, have a gap to the downside, but still come on to higher targets first. Of course, we can be aware that this gap has a high probability of being filled. But I do not think in this context that we have on this weekend rise that we need to get that fill, primarily because of the fact that we are right now holding that point of control from resistance into support. Again, if we lose that, context changes, and then it is a very high probability that we can close that CME gap very quickly. But while this maintains the support, I am going to be looking towards this big value area high. And will say this is a little bit of a zone. We do have that weekly coming in 119,400 and $81, and then you do of course have the daily just above $120,000, and you have a old daily naked point of control which I've been waiting a long time for, $120,500. So you do have some key levels up and around this value area high level, so it's a nice little zone of resistance that you have there, and it will play into the bigger context, the bigger picture, which was, well, really simply reclaim the value area low, be aware of the $118,000 level. It can offer resistance, but we have got through it now, so the target remains the value area high. This is all off the back of course, the bigger Elliott wave count and that 3 drives playing out, which gave targets. The really simple way that you can actually view this is the let's come down to the 1 hour chart. So if we were looking at this as a 3 drives, drive 1, drive 2, drive 3, reversal, most simplest way to get a target is Fibonacci from high to low, the CC. And you can see the top of that CC also coming in around 119,500. So, you know, what I would say here is I feel it's a bit of a stacked level of resistance, to be honest. So let's just add in this 3 drives so you can just see it and visualize it here. Drive 1, drive 2, drive 3, reversal. That's giving us into around $119,500 into the CC. So it's like when you have stacked support zones. Okay, we had stacked support in terms of the actual 3 drives and the Elliott wave count around 112,000. Well, now we have some stacked resistance around 119,500. What I want to end by saying here is, of course, with the Elliott wave count, we had an option of $112,000, and this Y, wave 4, could have come down to around even $108,000. So you just have to understand that these are zones. Well, especially with the lower target here, because this is a target which is just have to be understood. It is a very big zone. We could have bounced 100. Well, we did bounce 112. We could have dropped down to $108,000. So this was a very key zone of support, and it's not until you see the local strength that you can really identify with a high probability that that's the low. So what I mean by this is it's very aggressive and low probability that the low was in at $112,000 exactly. Although that's of course what happened at that time. You have to play. Or I would anyway, play cautiously. You are still breaking to the downside. You want to start to see some local strength. And once you've seen the local strength, that's where you can start to then say confidently, or now I believe the low is in. And of course, we've seen many local signs of strength to get us up to where we are here. First of all, local market structure change. You actually had a swing failure pattern on the lower term time frame to get into a long, but then of course you had a market structure change. You have a retest option of a long trade. You had the very, very higher term time frame. Medium-term time frame market structure change, break of the triangle. There's lots of opportunity, but now it's just safe to say, you know, this is a very strong low, and all comes together to explain why I am looking for this really nice value area high target. Again, this is again a little bit of a zone. I don't think we need to look at it as an exact dollar, but we can very much approach it as we approached $112,000. As we come up into this zone, we look for a sign of weakness. And if we get no sign of weakness, well, guess what? We can go to all-time highs. Just like if we came down to here and we continued with weakness and there was no sign of strength, well, we could have continued down to $108,000. But you bounced 112, you get a nice retest with bullish divergences, you get a market structure change, right? All of this is just increasing massive signs of strength. And so we're analyzing, they're going to be looking for the same analysis here, coming up into the value area high. Do we get a reaction at that level? Do we get a entry trigger at that level? Do we then get a sign of weakness off of that level? And thus we look for then the market structure changes. Do we look at we definitely will be looking at the order flow and things such as the amount of trades that we're getting into the highs, the CVD divergences, the open interest. These are all key things that we analyze as we approach these levels. So my final words here, actually, but before I say my final words, I'll give you one quick reminder of the $10,000 giveaway that we're doing, free to enter. Come join our Discord, all free. You can then enter the giveaway for free. Next week, we'll start giving away this $10,000. You can enter it right now. Come into the giveaway section, scroll up to the top. Not only do you get entry into the $10,000 giveaway, all new accounts are going to be having 20% off trading fees on Bybit, and you also will have the ATAS template for free as well upon joining the giveaway. To get access to the ATAS template, you do actually have to send a private message to customer service, who will send you that template, by the way. So yeah, hope you've enjoyed. And yeah, final words on Bitcoin. So yeah, be aware, I am very much aware of the CME gap. We will have that CME gap. It is a high probability of getting filled. I would just not say we need to, this context, instantly fill it unless we start to see the local weakness. And if we get that local weakness with a loss of the point of control, that's where I would start to say, well, yeah, there we go. Now I will be looking for the fill of that CME gap. Let me just tell you something here really quickly before I end. I just want to see something. So yeah, this is our CVD divergences right now. You can see we've got very strong bullish CVD divergences here. So this is of course, lower high, but look at this. Well, currently building lower high, but we're building very strong lower lows on the CVD. This is, strong higher lows, strong lower lows. Like this is building extremely big bullish CVD divergences. So that's something to be aware of. And well, I suppose last little thing that I will say here before I end, and that is you could even view this as a little mini range to be trading, right? So this is how you could get the fill of that CME gap and trade it in a sensible way. Mini range, this is our mini range high, this is our mini range low. If we are to get a little bit of a fake out of the mini range high, well, you can trade it down to the mini range low where you can look for a long at the mini range low, right? So essentially trade this as our mini range. Would say though, of course, you have to have lots of caution at the range high of a short Y. Well, we have big bullish divergences here. We are in a big bull market, so just play a little bit of caution, right? If you want to be this, if you want to be the high probabilities right now, of course, it's just take the longs. Okay, you do not need to even short for the CME gap, but you could look to long the gap fill, for example. But if you are a confident trader, if you know what you're doing, it's much like yesterday. I took a short trade off that point of control. I hit my take profit 1, stop loss to entry. Well, that was a profitable short trade, even though today we're trading, way above my entry of my short. So it's the same theory here. If we get a short trade from the mini range high, for example, or we get short trades off of some of our higher term time frame levels, we are going to look to take that short, take a pretty aggressive take profit 1, move stops to entry, protect ourselves. Then if we get a full reversal of that level, amazing. We've got a very, very good short trade. But if the expected, higher probability happens of we go to all-time highs, well, we're still able to extract some small profits and protect ourselves with these short trades on the rise. But of course, I do have longs running at the same time. I'm not just looking to take shorts here and I have I have longs on Bitcoin. I have longs now on many altcoins. And so, I'm exposed to higher prices. Right now, as I'm talking to you, I have no shorts open on Bitcoin. I do have longs open on Bitcoin, right? So it's like, this is why I like to take these shorts, just for those little bit of profits, but also that level of protection. I keep on saying last thing before I end, but again, I want to emphasize this. We came up to the point of control yesterday. That could have lost the value area low and got a bigger rotation to the downside. In the end, you go point of control, retest value area low, continuation. But I like that level of protection because of what if we had lost this level instead of retesting it, then it's a different story that we're in today. But anyway, I digress. It is pretty complex, but if you want to learn everything from the beginning to the end, chartchampions.com, full educational course, live trading streams, daily streams, giving you updates, giving you analysis, talking you through what we're looking at, why, and yeah, doing it all live in the time for you. So I hope that you've enjoyed this. If you want more, you know where to get it. And yeah, I will just end with that. Actually, I'll end with that today. If you want to see more, you know where to get it, chartchampions.com. Thank you ever so much. That's me signing out and hope you have a brilliant day. Goodbye.